I've butted in only because we have an important management joining us. Indian Hotels posted an outstanding set of numbers in their third quarter, 29% growth in revenues and nearly 33% growth in profit. To take us through what's going so right and how the future looks, we have with us Puneet Chhatwal, Managing Director and CEO of the company. Mr. Chhatwal, good morning. Thank you very much indeed for joining us. It's not always good for a journalist to start with such bombastic, positive adjectives, but this numbers call for it. What's going right? Is it something with the company or is it something with the industry and the economy?
Good morning, Latha. It's a bit of everything going right for the sector. I can only repeat what I've been saying. Number one, the demand is stronger than supply. Number two, there is growth. Because of the growth in the GDP, the demand remains strong, and as the disposable income rises, as the need of premiumization rises, the brands that we have, the majority of them operating within their segments in premium positions, they keep driving good results, good top line, good conversion, good flow through. And more important for us is our not like-for-like growth on a capital light model. So we are benefiting through asset management initiatives on own portfolio, which drive positive operating leverage and margin expansion through not like-for-like in new businesses.
I agree. All those are visible in your investor presentation. You guided us for double-digit growth. Now, that's a given. The point is, can you give us a range? I mean, will it be as good as this 29% that you've just posted?
But 29% includes the consolidation of the flight kitchen business, right? 16% is on the hotel segment. So we expect the flight kitchen business to grow north of 15%, whether it's 18 or 20 or 22. That only time will tell, but definitely north of 15. And if the hotel segment continues to grow, whether by 12 or 14 or 15 or 16% on an ever-increasing higher base, it's something to be very pleased about. Especially Q3 is the strongest quarter. We have the highest revenue, not since today, but since several decades in Q3. If that grows at north of 15%, and we have had 16 to be precise, I think that drives a lot of profitability, and we don't expect any change to happen, any significant change, unless there is some global event outside of our control. So I think we are very well positioned in especially balancing our portfolio on capital light and capital heavy model.
Yes, you spoke to us in detail about that when we last met. The new event, of course, is Kumbh, and that has given a new high to spiritual tourism. Do you benefit from this? And is this going to be a big undiscovered vertical in the quarters to come?
I think very important is the ever-growing demand for spiritual tourism. I think whether we have Kumbh or we have Ayodhya or we have holy city of Banaras or Tirupati, the number of visitors in these places is exceeding anybody's expectations. So all in all, anything which is, when you have Mahakumbh, anything which is within 100 square kilometer area is expected to benefit. And we are very pleased with our development on the spiritual tourism sector. And I always say we have only 50 plus locations. Actually, we should go to 100 plus locations and have temple circuits around entire south of India, for example, with our Ginger brand, because that is really needed in these circuits. So we're working on it with different state governments, and I do believe that spiritual demand on spiritual sector is also crisis resistant. There is no impact of any crisis on this kind of tourism unless the temples were shut the way they were during COVID.
Yeah. No, actually, what you say about South is very true. I mean, I can think of so many temples, say Tanjavur, Brihadishwara temple, Raghavendra temple, Guruvayur. There are, where people will throng, even if it is a problem, but if you give them luxury, then, that'll be lapped up.
Affordable luxury in spiritual destinations.
Fair enough. Fair enough. Actually, let me go beyond affordable luxury. You know, even now when we go to your Taj Mahal Palace or any of your really expensive properties, the crowd, the occupancy really hits you. It looks like 100% occupancy over there. You know, even in the best of the Goa hotels, Taj hotels. Do you think that that Taj has become somewhat affordable to the Indian middle class or the upper middle class? You have to now start thinking in terms of a super Taj, a super luxury.
Well, we should always keep thinking. We should not stop thinking. But I've always maintained that Taj is not just a brand. Taj is not just a hotel. Taj is an emotion. And the emotional connect that Taj has with India is phenomenal, and its growing emotional connect outside of India is also very strong. So the exemplary hospitality offered by Taj, again, for generations now, is also growing very strongly across the globe. And that's why maybe Taj was recognized as world's strongest hotel brand for now so many years, in the last 4 or 5 years, and India's strongest brand across all sectors. So I think to do something more special on Taj, we have the Taj Palaces. These are not normal hotels. These are living legacies, as we call them. And we have also Taj Safaris, which is Taj Plus, also in terms of their ability to charge. They're able to charge 3 times more than a normal Taj property.
Okay, so, well, then you have already thought about it.
We'll keep thinking about super luxury brand.
I'm sorry I'm rushing you because it's earnings season and there's another management lined up. So I want to ask you, what is your expectation from the budget? Is there some tourism thrust you're expecting or asking?
We have maintained infrastructure status for the sector at the central level, industry status in as many states as possible. The positioning of the sector will drive the contribution to the GDP growth as well as to the creation of jobs directly in the sector. And as the most important multiplicator of jobs, it will create a lot of jobs in other sectors. And I do believe that now in the last few years, tourism does get mentioned strongly in the budget speech, and hopefully we get a bit more than the mention on this budget.
Okay. Well, just leave me with a number, expected signings and openings in Q4 and at least a ballpark target for FY26.
Well, we'll keep opening hotels at the pace that we are, plus add another 5-6, which means 30 plus hotels in the next financial year. We'll finish this year definitely on 24 or 25 hotels open, with 122 hotels in pipeline. We expect to open at least 100 hotels over the next 3 years across all our 5 hotel brands.
Okay. So that will take you well over 300, I guess 350. And you're expecting to do, double all that by 2030. I read your Accelerate report. I mean, that's massive plans. Chhatwal, we'll have a relaxed conversation on another day, but many congratulations for an excellent set of numbers. Thank you for joining us.
Thank you for having me. Thank you so much.